All right, everyone, buckle up because the crypto world is on fire right now, and you are not going to want to miss a single second of this. We've got seismic shifts happening across the board, from major institutional plays shaking up the landscape to groundbreaking security measures being deployed in real time. The pace is relentless, the stakes are sky high, and if you're not plugged in, you're already behind. We're talking about capital on the move, strategic maneuvers to protect digital assets, and bold predictions that could redefine the market. Let's dive straight into what's making waves and what you absolutely need to know to stay ahead of the curve. First up, we're seeing a fascinating reallocation of capital, with major players seemingly shifting their focus from Bitcoin to Ethereum. What's driving this significant move, and what does it mean for the future of these leading digital assets? We've got the details. Next, we're diving into a bold and perhaps unprecedented move by El Salvador. In a strategic effort to fortify its Bitcoin holdings against future threats, the nation has taken a significant step to fragment its massive reserves. This isn't just about diversification, it's a calculated response to emerging technological challenges. We'll break down exactly what they've done, why they've done it, and what this could signal for other nations holding digital assets. Then, we're shifting gears to look ahead at the potential for a massive altcoin season in 2025. The big question on everyone's mind is whether now is the opportune moment to start reallocating capital away from Bitcoin and into high-cap altcoins. We'll explore the market signals and expert analysis that suggest this could be a pivotal moment for altcoin investors. And finally, we're hitting you with some electrifying predictions for Bitcoin's price trajectory in 2025. Analysts are forecasting a staggering $450,000 price target, fueled by a potent mix of whale activity, liquidity surges, and crucial market trends. What's behind this bullish outlook, and what indicators should you be watching? We've got the full breakdown. Stay locked in, hit that like button, subscribe if you haven't already, and ring that notification bell so you don't miss any of these critical updates. Capital reallocation alert, the Ethereum ETF effect. In a development that's sending ripples through the financial world, a significant shift in capital allocation appears to be underway, with indications that substantial funds are moving from Bitcoin towards Ethereum. This trend is largely being attributed to the recent approvals and subsequent performance of Ethereum exchange-traded funds, ETFs, which have opened new avenues for institutional investors to gain exposure to the second-largest cryptocurrency. The allure of Ethereum, bolstered by its robust ecosystem, upcoming technological upgrades, and now enhanced accessibility through regulated financial products, seems to be capturing the attention of major capital allocators. For months, the narrative surrounding Bitcoin has been dominated by the anticipation and eventual approval of its spot ETFs. While these products have indeed brought a significant influx of new capital into Bitcoin, the landscape is dynamic. As institutional products for Ethereum gain traction, the competitive landscape for digital asset investment is intensifying. Ethereum's utility as a platform for decentralized applications, dApps, smart contracts, and its ongoing development, particularly with the anticipated shakedown of its network and potential for future upgrades, presents a compelling case for long-term investment. The Ethereum ETF approvals mean that traditional financial institutions can now offer their clients exposure to ETH without the complexities of direct digital asset custody. This has democratized access for a broader range of investors, from retail participants looking for simpler investment vehicles to large endowments and pension funds seeking to diversify their portfolios with digital assets. The immediate impact has been seen in the trading volumes and price action of ETH, which has shown resilience and growth as these new investment products are absorbed by the market. This reallocation doesn't necessarily signal a downturn for Bitcoin, but rather a maturing market where different digital assets offer distinct value propositions. While Bitcoin is often viewed as a digital store of value, akin to digital gold, Ethereum is increasingly seen as a platform for innovation and a foundational layer for the decentralized internet. The capital flowing into Ethereum ETFs suggests a growing institutional appetite for assets with broader utility and potential for technological advancement. Analysts are closely watching how this capital movement will influence the price dynamics of both cryptocurrencies. Some believe this could lead to a period where Ethereum outperforms Bitcoin, especially if the development roadmap for Ethereum continues to deliver on its promises. Others argue that Bitcoin's established network effect and its role as the primary digital store of value will ensure its continued dominance. The market is essentially testing different theses for digital asset investment, and the rise of Ethereum ETFs is a major catalyst in this ongoing evolution. The implications for the broader crypto market are substantial, as this trend could set a precedent for how other digital assets are integrated into traditional finance. But this capital shift is just one piece of a much larger puzzle. Meanwhile, a nation is taking extreme measures to safeguard its digital treasure against future technological threats, and you won't believe what they've done. El Salvador's quantum leap, fortifying Bitcoin reserves. In a move that underscores a proactive approach to emerging technological threats, El Salvador has strategically fragmented its substantial Bitcoin holdings, distributing approximately $678 million worth of BTC across 14 new blockchain addresses. This significant operational maneuver aims to bolster the security of the nation's digital reserves against the potential advent of quantum computing, a technology that could theoretically pose a risk to current cryptographic standards. The country's Bitcoin office orchestrated this large-scale security operation last Friday, meticulously transferring its 6,274 Bitcoins, which were previously consolidated in a single address, into smaller, more manageable wallets, each capped at around 500 BTC. The core rationale behind this fragmentation strategy is to mitigate the attack surface associated with public keys. In the world of blockchain, when an address is used for a transaction, its public key is revealed on the ledger. Future quantum computers, if powerful enough, could potentially use this revealed public key to derive the private key, thereby gaining unauthorized access to the funds. By dispersing the Bitcoins into multiple wallets, El Salvador limits the potential damage of such a hypothetical breach. If one wallet's public key were compromised, only the Bitcoins within that specific wallet would be at risk, rather than the entire reserve. This proactive security measure is being hailed by some as a demonstration of advanced risk management and foresight. Each new wallet, holding a maximum of roughly 500 BTC, valued at approximately $54 million at the time of the operation, acts as a form of technological insurance. The transparency of these on-chain transfers also serves a dual purpose. It not only confirms the execution of the strategy, but also aims to educate the broader market, particularly institutional investors, about potential quantum vulnerabilities and the methods to address them. This voluntary disclosure is a clear signal about the country's commitment to secure its digital assets. However, the urgency and scale of this threat remain a subject of debate within the crypto community. Experts from institutions like Chaincode Labs have pointed out that a significant portion of the total Bitcoin supply, estimated at 32.7% or nearly 6.36 million Bitcoins, could be vulnerable if quantum computing capabilities advance significantly. Despite these concerns, the practical reality is that current quantum computers are far from being able to decipher the 256-bit keys that protect Bitcoin. Michael Saylor, a prominent advocate for Bitcoin adoption, has characterized these fears as largely hype, suggesting that the Bitcoin community and developers would swiftly implement protocol upgrades and patches should the threat become imminent. El Salvador's administration, however, appears to be taking a more conservative stance, prioritizing immediate security measures. This cautious approach is particularly noteworthy given El Salvador's ongoing negotiations with the International Monetary Fund, IMF, for a $1.4 billion financing package, which reportedly comes with conditions that include scaling back its Bitcoin initiatives. The fragmentation of reserves can be viewed as a strategic compromise, allowing the country to maintain its significant exposure to Bitcoin while simultaneously demonstrating a robust and visible commitment to prudent risk management. potentially appeasing international financial bodies. This bold experiment is being closely watched by other nations that hold or are considering holding cryptocurrencies, presenting a fascinating case study in balancing innovative financial strategies with institutional pressures and global financial stability. It's a high-stakes move, showcasing a nation's unique approach to digital asset security. But beyond national strategies, the market itself is signaling massive potential shifts, and the question on everyone's mind is it time to look beyond Bitcoin? Altcoin Season 2025, the Great Capital Reallocation. As the digital asset market matures, a compelling question is emerging among investors. Is 2025 the year for a significant shift in capital allocation, moving away from Bitcoin and towards high-cap altcoins? This strategic consideration is fueled by evolving market dynamics, technological advancements in various blockchain ecosystems, and the potential for altcoins to offer higher growth prospects in the coming cycle. While Bitcoin has solidified its position as a primary store of value, the burgeoning utility and development within the altcoin space are capturing increasing attention from both retail and institutional participants. The concept of altcoin season refers to periods where alternative cryptocurrencies experience significant price surges, often outperforming Bitcoin. Historically, these seasons have followed periods of Bitcoin dominance and consolidation, where capital that has profited from Bitcoin's rise begins to seek higher returns in other digital assets. Analysts are closely examining current market indicators, including on-chain data, developer activity, and the performance of decentralized applications, DApps, to predict the timing and magnitude of the next potential altcoin season, with many pointing towards 2025. Several factors contribute to the bullish outlook for altcoins. Firstly, the ongoing development and upgrades within major altcoin ecosystems, such as Ethereum's continued evolution post-merge and shakedowns, are enhancing their utility and scalability. Ethereum's role as the backbone for a vast array of DeFi decentralized finance and NFT, non-fungible token, applications positions it as a key player in the future of the digital economy. Beyond Ethereum, other Layer 1 blockchains and innovative altcoins are demonstrating significant technological advancements and gaining user adoption, creating potential for substantial growth. Secondly, the increasing institutional interest in digital assets, as evidenced by the approval of Bitcoin ETFs and the growing anticipation for Ethereum ETFs, is paving the way for broader market acceptance. As more regulated investment vehicles become available, capital is expected to flow into the broader digital asset market, including promising altcoins. This influx of institutional capital could provide the much-needed liquidity and validation for altcoins to experience significant price appreciation. However, reallocating capital from Bitcoin to altcoins is not without its risks. Altcoins are generally more volatile and less established than Bitcoin, carrying higher inherent risks. Investors need to conduct thorough due diligence, understanding the specific use cases, technological underpinnings, and tokenomics of each altcoin before committing capital. The success of an altcoin season also depends on various external factors, including regulatory clarity, macroeconomic conditions, and overall market sentiment. Despite the risks, the potential rewards are substantial. If the market follows historical patterns and the technological advancements in the altcoin space continue to gain traction, 2025 could indeed mark a significant rotation of capital. This would not only benefit altcoin investors, but could also signal a new phase of maturity for the entire digital asset ecosystem, where diverse blockchain technologies and applications find their place alongside Bitcoin's established role. It's a bold strategy, questioning Bitcoin's long-term dominance. But what if the biggest upside is still ahead for Bitcoin itself? We've got predictions that could blow your mind. Bitcoin bull case, $450 K target fueled by whales and liquidity. In a bullish forecast that has captured the attention of the crypto community, analysts are projecting a staggering target of $450,000 for Bitcoin's price within the current market cycle. This ambitious prediction is not based on mere speculation, but rather a confluence of historical trends, significant whale activity, and favorable macroeconomic signals, all pointing towards a potentially explosive upward trajectory for the flagship cryptocurrency. The narrative suggests that a combination of increased institutional participation and expanding global liquidity could be the primary drivers for this anticipated surge. Central to this bullish outlook is Bitcoin's historical performance, particularly the cyclical nature of its price movements. While September has historically presented a mixed bag for Bitcoin, with some years showing declines, recent data indicates a potential shift. Positive returns in September 2023, 3.99%, and 2024, 7.11%, are challenging the previously observed negative patterns. This historical analysis suggests that the market may be entering a phase where seasonal trends are less impactful, or that September is becoming a more bullish month for Bitcoin, potentially signaling a sustained upward trend. Furthermore, on-chain data from major exchanges like Binance reveals a notable increase in whale activity. The average size of Bitcoin deposits on the exchange has surged from 0.8 BTC to an average of 13.5 BTC per transaction. This significant uptick in larger transactions is interpreted by analysts as a clear indication of increased institutional and high-net-worth individual participation. Such activity often correlates with greater market stability and can precede substantial price rallies, as large players strategically position themselves for growth. The broader market cycle analysis also supports the $450,000 target. Each successive bull cycle for Bitcoin has tended to be longer and flatter, suggesting a period of sustained accumulation before major price breakouts. The current cycle, influenced by factors such as the growing adoption of spot Bitcoin ETFs and the gradual flow of capital into various digital assets, has created a more robust accumulation phase. This extended period of consolidation, coupled with increasing liquidity, is seen as a precursor to a significant upward movement. Macroeconomic indicators are also aligning favorably. Global M2 liquidity, a measure of money supply, has reached record highs. Historically, periods of high liquidity have been strongly correlated with positive performance in risk assets, including Bitcoin. The current divergence between Bitcoin's price action and the liquidity curve suggests that the cryptocurrency may be undervalued relative to the amount of money circulating in the global economy, indicating a strong potential for upward price discovery. Analysts point to potential Fed rate cuts in 2025 and the possibility of further ETF approvals for other digital assets as additional catalysts that could fuel Bitcoin's rally. If Bitcoin continues to follow its historical power law trajectory and these supportive factors materialize, the path to $450,000 by late 2025 appears increasingly plausible. The convergence of historical patterns, robust whale accumulation, and supportive macroeconomic conditions paints a compelling picture for the future of Bitcoin's price. These are massive predictions, and the market is certainly buzzing. But as we wrap up, let's quickly recap the seismic shifts we've covered today. Don't go anywhere. And that's a wrap on another explosive episode of Bitcoin Bulletin. We saw capital potentially shifting towards Ethereum ETFs, El Salvador making bold moves to protect its Bitcoin against quantum threats, the exciting prospect of a 2025 altcoin season, and jaw-dropping predictions of Bitcoin hitting $450,000. Don't miss out on any of these critical updates. Hit that like button, subscribe to the channel, ring the notification bell, and follow us on all social media platforms for real-time insights. We'll see you next time.